Hey there, deep divers. Ever wonder how those organizations, the ones doing good in the world, actually handle their money?
It's a good question.
Yeah.
It can be a little mysterious sometimes, right? This whole world of not-for-profit financial reporting.
Yeah. And that's exactly what we're diving into today.
We're going to be using excerpts from the Canadian Accounting Handbook.
Ooh, the handbook.
Yeah, you can think of it like the rule book.
Okay.
But we're going to figure out what those rules actually mean,
Okay.
like how they apply in the real world. For you.
Exactly. Because whether you're prepping for a board meeting or maybe thinking about starting your own not-for-profit
Yeah.
or just curious, this is the place to be to get up to speed fast.
Exactly.
Awesome.
So one of the first things to understand is that nonprofits,
Um.
they have a unique responsibility, to be open about their finances. Unlike businesses, where the focus is just profit.
Right.
Nonprofits, they need to keep their members informed. Their contributors, even creditors, everybody needs to be in the loop.
Makes sense.
And that's a big theme, actually, throughout the handbook.
Oh, really?
Yeah, you'll see it in sections .08 and .09.
I'll have to check those out.
Yeah.
So it's more than just making money.
Oh, absolutely.
Okay.
It's about accountability and transparency.
Gotcha.
Making sure everyone understands how the money is being used.
Yeah, because there's more stakeholders.
Exactly.
Okay, that makes sense.
Now, something else that really stood out to me
right.
was in section .9, it says that, those financial statements,
Yeah.
they're not just about the current bottom line.
Oh, okay, interesting.
Yeah, they're supposed to show how, assets and liabilities are changing
Okay.
and how well the organization is actually, performing economically.
Oh, wow, so it's more comprehensive.
It is. It's about painting a complete picture of, what they're doing.
Okay, that's way more useful than I thought.
Yeah, definitely.
But let's be honest, accounting can be a bit of a headache.
It can be. It can be.
Even the handbook talks about this, like a benefit versus cost constraint thing in section .13.
Right.
What's that all about?
Basically, they're saying, don't overwhelm everyone with data if it's not worth the effort to collect it.
Oh, yeah.
So it's about finding that balance.
That sweet spot.
Exactly. Enough information so people can make good decisions, but not so much that you're drowning in it.
I love that. That's good.
Yeah.
So how does that connect to this idea of materiality that keeps coming up?
Oh, materiality.
Yeah, in section .14.
Yeah, good question.
How's that all about?
Think of it this way. Would leaving out a certain piece of information,
Okay.
or maybe misstating it, would that change someone's decision? If the answer is yes, then it's material.
Okay. Yeah.
It matters.
Got it.
Yeah. So it's all about providing the information that truly impacts decision making.
Oh, that makes sense.
Right.
And that makes it clear why it's such a big deal. This is reminding me of something else the handbook mentions.
Okay.
Understandability.
Oh, yes.
I'm glad they acknowledge that not everyone has a finance degree.
Absolutely. Even complex stuff, it should be presented in a way that makes sense, right?
Right, exactly.
To a wider audience, like it says in section .16.
Yes. I wish more things were written that way.
I know, right? It's all about clear communication.
Okay, so we have materiality and understandability.
Yes.
What about relevance and timeliness?
Oh, those are essential too, especially when you're trying to make quick decisions.
Right, exactly.
You need the right information at the right time.
Yes, because outdated information, that's not helpful.
It's like trying to use an old map. You'll get lost.
That's a great analogy. I love it.
Yeah?
Okay, so far so good.
Yeah.
Now, the handbook also stresses reliability.
Oh, yes. Reliability is key.
Yeah, and it's made up of 3 parts, right?
It is, yeah.
Representational faithfulness, verifiability, and neutrality.
That's right.
This feels like the foundation of trust,
Absolutely. When you're looking at a nonprofit's finances.
Right, exactly.
You need to be able to trust the information.
And it's that substance over form thing again, right?
Exactly.
Okay, I get it.
Making sure that what's reported actually reflects what's happening, not just how it looks on paper.
Makes perfect sense. Now, with all these different qualities, materiality, understandability, relevance, timeliness, and reliability, it seems like it could get tricky balancing them all.
It definitely can be a challenge, yeah.
Especially with this emphasis on professional judgment in section .21.
Right, because sometimes, achieving one characteristic might mean compromising on another.
Oh, I see.
It's a balancing act, and that's where the expertise of, accountants comes in.
They're like the financial tightrope walkers.
Exactly.
Okay, I'm starting to see how this all fits together.
Good.
Now, let's talk about those financial statements themselves.
Okay.
What are they actually made of?
Right, the handbook calls these the elements. Elements, okay.
Yeah, it's in section point 22.
Got it.
And these elements are kind of like the ingredients in a recipe.
Okay.
They can be grouped into two main types.
Yeah.
Those that describe like the state of affairs at a specific moment, like a snapshot,
Gotcha.
and those that changes over a period of time, like a video.
Oh, okay. That's a good way to think about it.
So like inventory levels on a certain date versus how donations fluctuated over the year.
Oh, that's a perfect example.
Right.
Yeah. Okay. That makes sense.
So we've got these different elements that come together to paint that picture.
Cool.
Now, speaking of assets, let's talk about those for a minute.
All right. Assets.
So to be recognized as an asset, right, in a nonprofit's financial statements, there are 3 criteria.
Oh.
This is all laid out in section point 25.
All right.
First, you need to have control over the benefits the asset provides.
Okay. Control.
Second, those benefits need to contribute to future net cash flows or provide services for the organization.
So it has to be useful, basically. Exactly. It needs to have a purpose.
Okay.
And third, the transaction that gave the nonprofit the right to control the benefit, that needs to have already happened.
Okay, so past tense.
Yeah, it can't be something they're hoping to get in the future.
Right, got it.
So those are the 3 key criteria for an asset.
I'm noticing they emphasize control.
Yeah, control is important.
Does that mean legal ownership isn't always necessary?
That's right.
Huh, interesting.
So, for instance, a nonprofit could have control over a building, right?
Yeah.
Even if they don't technically own it.
Oh, all right.
Maybe they have a long-term lease or it's held in trust for their benefit.
Makes sense.
What matters is they control those benefits.
So it's about access and usage rights more than ownership on paper.
Precisely.
This is making me think about donations again.
Okay.
It's wild that donated items can be assets. Like someone gives you a van. Suddenly your balance sheet looks different.
Absolutely. It highlights that, nonprofits can gain assets without actually spending money. But it also comes with responsibility, right?
Okay, how so?
Well, according to point 27,
Okay.
they need to track those donations carefully,
Okay.
figure out their fair value, and make sure they're being used to further the organization's mission.
So it's not just free stuff. It comes with accounting strings attached.
Exactly.
Okay, that's making a lot more sense now.
Good, good.
What about the flip side?
Yeah.
Liabilities.
Oh, liability.
How are those defined for nonprofits?
So section point 29, it lays it all out.
Okay.
Liabilities are present obligations arising from past events,
Okay.
and they're expected to lead to an outflow of resources.
Okay, outflow of resources.
And it's important to remember that those resources don't always have to be cash.
Hold on. So a nonprofit's liability could be something other than owing money.
That's right.
Wow. Okay, what would that look like?
Imagine a community center, right?
Okay.
And they commit to providing, let's say, a certain number of free after-school programs for a year.
Okay. Yeah.
They haven't spent any money yet, but they've created a liability because they're obligated to deliver those programs.
Oh, I see.
The settlement of that liability comes through providing the service, not through, like, a cash payment.
Oh, that's a really clear example. Thanks.
Yeah, no problem.
Now let's shift to the revenue side of things.
Okay, revenue.
I'm guessing this is where things get more diverse for nonprofits.
Absolutely. It's not just about sales like in a typical business.
Right.
Section point 32, it paints a much broader picture.
Okay, like what?
So we're talking membership fees, fees for services they provide, government grants,
Of course, donation.
donations, of course, a big one.
Yeah.
It's all about tapping into different streams.
Keep things flowing.
Exactly.
And that brings us to this important concept of matching, right?
Matching, yes.
Matching costs with the revenue they help generate.
Precisely. Section point 46 emphasizes this.
Okay.
It gives you a much clearer understanding of how efficiently a nonprofit is using its resources.
Instead of just lumping all the expenses together, they're trying to show which costs are directly related to which income.
Exactly. It's all about transparency and accountability.
That's smart.
Yeah. Yeah.
Okay, things are getting a little more complex now.
A little bit, yeah.
We're talking about measurement bases in sections .49 and .50.
Right. Measurement bases.
The handbook mentions all these terms: historical cost, replacement cost, realizable value, and present value.
Yeah, those are important concepts.
Can you break this down for me? Like, I'm not an accountant.
Of course. So imagine you have let's say, a vintage car you're trying to value.
Okay, a vintage
Or
car.
the historical cost is what you paid for it way back when you bought it.
Okay.
Replacement cost, That's what it would cost to buy the same car today, which might be very different.
All right, because of inflation and stuff.
Exactly.
Okay.
Realizable value is what someone would pay you for it right now,
Gotcha.
considering its condition in the market.
Okay.
And then present value, that's a bit more complex. It factors in like the future benefits you'll get from the car, like maybe entering it into classic car shows, winning prize money, things like that.
So it's like looking into the future value.
Yeah, it's taking into account those potential future earnings.
Oh, that's interesting.
So these are different ways to look at an asset's value,
Okay.
depending on what information you're trying to get.
How does this apply to nonprofits?
Well, imagine a nonprofit owns a building that was donated to them years ago.
Okay.
The historical cost might be very low,
Right.
maybe just a nominal amount to cover some legal fees.
Okay.
But the replacement cost to buy a similar building today, that could be way higher.
Right. That makes sense.
So understanding both those values gives you a much better picture.
Okay. That's really helpful.
Good.
Now let's talk about transitioning to new accounting standards.
Oh, yeah, that can be a bit of a headache.
I bet. Section 1501, it lays out all the rules, but I'm guessing this is where things can get tricky.
It can be a complex process, for sure. There are specific exemptions situations where you can't apply the new standards retroactively.
Oh, okay.
Sections .08 and .10 go into all those details.
So it's not always a simple switch.
No, not always.
And here's an interesting point. How goodwill is handled during these transitions.
Oh, goodwill.
Yeah, section .12e. It specifically talks about goodwill from acquiring a for-profit entity.
Right, right.
Why is that treated differently?
That's a great question, and it takes us into some really interesting territory.
Okay, lay it on me.
So goodwill, essentially, it's the intangible value of an organization.
Okay, intangible.
Like its reputation, brand recognition, customer relationships, things like that.
Gotcha.
In the for-profit world, this is often a big deal,
Yeah.
carries a hefty price tag.
Yeah.
But in the nonprofit realm, the concept of goodwill gets a bit more nuanced.
Okay, I'm intrigued. Tell me more.
Well, we'll have to dive deeper into that in the next part of our deep dive.
Sounds good. I can't wait.
But for now, keep those brains buzzing.
Yes, deep divers, stay curious.
That's exact.
See you next time.
See you then.
Welcome back, deep divers.
Glad to be back.
So, last time we were talking about goodwill,
Oh, yes, goodwill. Always a fascinating topic.
especially when it comes from, like, acquiring a for-profit.
Right. And section 1501.12e, it really lays out how that works.
Okay, remind me what that section says.
Well, imagine a nonprofit, right?
Okay.
They acquire a for-profit business.
Mm-hmm.
That business has a good reputation,
Yeah.
solid customer relationships, things like that.
Okay.
That goodwill, it has real value.
Makes sense.
And it carries over to the nonprofit's financial statements.
So even though it's now part of a nonprofit,
Right.
those assets, that reputation,
Yeah,
it still matters.
exactly. It's not just wiped away.
Okay.
But here's where it gets interesting.
Okay.
If the goodwill came from acquiring another nonprofit, it's treated differently.
Really?
Yeah, instead of recognizing it directly.
Okay.
The handbook says to exclude it from that opening statement of financial position and adjust it through net assets instead.
That seems complicated.
It is a bit more complex.
Why is there a different approach depending on where the goodwill came from?
It's a really good question.
Yeah.
It makes you think about, like, how we value those intangible assets.
Right.
Think about it. A for-profit's goodwill.
Okay.
It's often tied to, generating profits,
Mm-hmm.
which isn't the primary goal of a nonprofit.
So maybe it's easier to measure in financial terms when it comes from a for-profit,
That could be part of it, yeah.
whereas with a nonprofit, it's more about, like, mission alignment,
Right,
community impact, those things that are harder to put a dollar amount on.
exactly. It's a different way of thinking about value.
It highlights how nonprofits are unique.
Absolutely.
Their value goes beyond just, like, pure financial metrics.
They're making a difference in the world.
Exactly. And that's priceless.
Couldn't have said it better myself.
This makes me think about something else we touched on earlier,
Okay.
about those different revenue sources.
Oh, yes, the revenue streams.
It's not just sales, right?
Yeah, not at all.
It's membership fees, grants,
donations.
all sorts of things.
It's a much more diverse picture.
And that impacts how they report their performance, too.
Oh, absolutely.
It's not just about chasing that one bottom line.
Oh.
It's showing how they're using all those resources to do what they're supposed to do.
Exactly. Achieving their mission.
Speaking of diverse income, let's go back to donations for a minute.
Okay.
We talked about how donated items can be assets.
Right, like that van example.
Yeah, it really challenges the traditional idea of what an asset even is.
It does, because you don't have to spend money to get it.
Right. It's not just about spending. It's about, like, having something valuable.
And it's about recognizing that nonprofits get those valuable things in different ways than businesses do.
Okay.
Like, that building that's donated is a huge asset,
Right.
but no money changed hands.
So how does that actually work? Like, how do they determine the value if it's something unique?
That's where fair value comes in.
Okay, fair value.
Let's say an artist donates a sculpture.
Okay.
The nonprofit would need to get an appraisal.
Could figure out how much it's worth.
Exactly.
Like,
and that amount, that becomes the asset value on their statements.
So putting a dollar amount on a gift, in a way.
In a way, yes, but it's important to reflect the true worth to the organization.
Right, because it is an asset now.
Exactly.
And that applies to other donations too, right?
Oh, yeah, like those office supplies you mentioned earlier. They would need to figure out the fair market value of all that stuff.
And record it accordingly.
Precisely.
Okay, now let's talk about liabilities again.
Are back to liabilities.
We said they're not always about owing money,
Right, they're obligations.
which can be settled in different ways.
And remember, a nonprofit's liabilities,
Yeah.
they can go beyond just financial stuff.
Oh, okay, like what?
They might have a commitment, right,
Okay.
to provide a certain number of community service hours
Mm-hmm.
or to deliver a specific program to a certain group of people.
So how do they settle those kinds of liabilities if it's not about paying?
By fulfilling those commitments.
So, like, give me an example.
If a nonprofit promises 1,000 hours of tutoring,
Okay.
they settle that liability by actually doing those tutoring hours.
Oh, I see.
Makes sense.
Yeah, it's a different kind of settlement.
Exactly.
It's about action, not just money.
It's about impact.
This makes me think about matching again.
Oh, yeah, matching.
How do nonprofits match their costs with all those different kinds of revenue,
Yeah.
especially when some aren't even money?
It is more complex, isn't it?
Yeah.
Matching still applies, but it's, how do I say it?
Nuanced.
Yes, nuanced is a good word.
So, like, how would they match the cost of a free community garden,
Okay, a community garden.
which might be funded by, like, a mix of donations and volunteer work and maybe some grant money?
Right, lots of different sources.
But the revenue it generates is, like, harder to measure.
Because the garden itself isn't selling anything. In that case, they probably focus on those direct costs,
Okay.
like the seeds, the tools, staff time, things like that, and match those to the different funding sources.
So it's more about showing the connections
Right.
than finding an exact dollar-for-dollar match.
It's about transparency, showing how they're using all those different resources
Makes sense.
to achieve their mission.
Okay, back to measurement basis for a minute.
All right, measurement bases.
We talked about historical cost, replacement cost, all those.
Yes, those different lenses for looking at value.
So in real life, how do these play out for nonprofits?
Let's say a nonprofit gets a donated van.
Okay, donated van,
They'd need to determine its fair value.
which might be way lower than a new one.
Exactly.
So even though it was free, they still have to recognize its value.
Right, still an asset.
What about those other measurement bases? Like, when would they come up?
Well, imagine they later decide to sell that van.
Look,
The realizable value becomes important then.
to figure out a fair selling price.
Right, taking into account its age, condition, all of that.
So it's about choosing the right tool for the job.
Exactly.
What about present value?
Present value might come up if they're thinking about a big investment,
Okay,
like buying a new building.
makes sense.
They'd have to project those future benefits, like, more program space, maybe rental income, and then discount those back to their present value.
To see if it's a smart move financially.
Exactly.
Okay, that makes sense.
Now, shifting gears a bit,
Okay.
let's talk about something that's often overlooked.
What's that?
Volunteer contributions.
Oh, yeah, volunteers.
They're crucial for so many nonprofits.
But they don't always show up in the financials, do they?
Traditionally, no, not really.
So how does the handbook address that?
Well, Section 4410.17,
Okay.
it talks about the benefits of recognizing contributed services.
Including volunteer time?
Yes, exactly.
And so they're encouraging nonprofits to, like, actually record the value of that work,
It's not mandatory, but it's something to consider.
especially when it's a significant contribution.
Right.
Or if not doing so would be kind of misleading.
Exactly. It's about acknowledging that volunteer labor has real economic value.
It's not just free help, it's a real resource.
It's an investment of time and skills.
It's essential for many nonprofits to even function.
Absolutely.
This makes me think about those other in-kind contributions, too.
Oh, yeah, like donated professional services
Mm-hmm.
or use of a facility for free.
Yeah, all those
The
things.
same principle applies.
It's still valuable, even if there's no money involved.
It's about painting a complete picture
Of all the resources.
that fuel a nonprofit's work.
Okay, this is really helpful.
Good, I'm glad.
It's giving me a much broader perspective.
And this leads us to a bigger conversation about how nonprofit financial reporting is changing.
It's evolving.
As the sector grows,
And becomes more complex.
there's a need for accounting practices that, really reflect all those different activities and resources.
It's about more than just the numbers. It's about a more holistic
Heuristic, that's a great word.
of how nonprofits create value.
Recognizing the contributions of volunteers,
Donated goods.
all those intangible assets.
The things that make nonprofits unique.
Exactly. And that's where things get even more interesting.
Ooh, a cliffhanger.
We'll dive into all that in part 3.
Can't wait. See you there, deep divers. Welcome back, deep divers. It's been quite a journey so far.
It has.
This whole world of not-for-profit financial reporting.
Definitely a lot to unpack.
Yeah, from those goodwill mysteries
Right.
to the value of a donated van.
Who knew vans could be so complicated?
Right. It's amazing how differently these organizations handle their finances.
It is. It's a different mindset.
So in this last part,
Yeah.
let's zoom in on some specifics
Okay, sounds good.
from the Canadian Accounting Handbook.
All right, let's get into the details.
I'm ready for some real-world examples.
You got it.
Where should we start?
Let's jump into section 4400.
Okay, 4400,
This is all about how nonprofits actually present their financial statements.
like the format and everything.
Exactly. It outlines the key players.
Okay.
The statement of financial position, statement of operations,
Okay.
statement of changes in net assets,
Okay.
and the statement of cash flows.
So it's like a complete financial report card.
Yes, but instead of grades, we're looking at assets and liabilities.
And all of those different revenue streams we've been talking about.
Exactly. And within each statement, there are specific things they need to disclose to make things clear.
Okay, like what?
Well, for instance, section 4400.19,
Right.
it emphasizes breaking down net assets by, restriction category.
Restriction category, what's that?
Think of it like labeling different jars of money.
Okay, jars of money. I like
One jar for endowments,
Okay.
one for specific programs,
Okay.
and one for general operations.
So it's like this money can only be used for this.
Exactly. Transparency is key, right?
Right, because donors want to know their money is being used how they intended.
Absolutely.
Like imagine donating to an environmental nonprofit.
Okay.
You wouldn't want that money going towards their admin costs.
Exactly. That's why clear labeling and reporting is so important.
And that transparency extends to revenues and expenses too,
Well,
right?
absolutely. We've talked about recognizing revenue from all those diverse sources,
Yeah.
but how does that actually look on the statement of operations?
That's a good question because it could get really messy.
Right, if they're just lumping everything together.
Yeah, donations, grants, membership fees all in one big pot.
Well, section 4400.37 addresses that.
Okay, what does it say?
When a nonprofit acts as a principal in a transaction, they need to present revenues and expenses at their gross amounts.
So like if they earn money from a service,
Right.
they show the revenue and the expenses related to that service.
Exactly, not just the net profit.
So you can see the full picture.
Yes, it's about transparency and accountability. And that detail carries over to the statement of changes in net assets, too.
Which is?
This statement basically tracks how those net assets have changed over time.
Okay, over time.
It includes things like contributions, investment income, program expenses,
Okay, so you can see how their financial position has changed.
Exactly. You can start to analyze trends and see if they're managing their money well.
It's like a financial history lesson.
I like that analogy.
Now, remember how we talked about valuing donated assets?
Oh, yes. Always a tricky one.
Putting a value on that donated building is one thing.
Right, because you know what a similar building would cost.
But what about, like, a donated painting?
Or a truckload of office supplies.
Right. How do you even begin to put a price on that?
Well, sections 4433 and 4434 get into that.
Okay.
They focus on tangible and intangible assets.
Got it.
And they emphasize recognizing those contributed assets at their fair value.
Fair value. Okay.
At the time of donation.
So they have to figure out what it's worth on the open market.
Exactly. So if they get a donated building, they need to figure out its market value and record that.
Even though they got it for free.
Exactly. It's about making sure their financials are accurate.
Makes sense.
But those sections also acknowledge that determining fair value isn't always easy.
Right, like how do you put a price on a historical artifact?
Exactly.
Yeah.
Or a one-of-a-kind piece of art.
Yeah, that's tough.
That's where professional judgment comes in.
Accountants have to use their expertise
They have to consider different factors.
and sometimes make some tough calls.
Exactly.
And that need for careful consideration is even more important in Section 4441.
Ah, yes, 4441.
This one's all about collections.
Collections held by not-for-profits, yes.
Museums, art galleries, all those.
Libraries, historical societies, all sorts of organizations.
Those collections can be so valuable.
Incredibly valuable, often irreplaceable.
But they're not usually for sale, so how do they factor into the financials?
That's the big question, right?
Yeah.
Section 4441 offers a couple of methods. They can record them at cost or at a nominal value.
So if a museum knows the original price of a painting.
They can use that as the cost.
Okay.
But if it was donated,
It gets trickier.
much trickier.
Sometimes you can't put a price on historical significance.
Exactly. It goes beyond monetary value.
So they might just record it at a nominal value.
Right. Just to acknowledge that it's there and it has value.
It's like saying, we know this is valuable, but it's more than just a number on a balance sheet.
Exactly. And this brings us back to something we've been talking about throughout this whole deep dive.
What to that?
The nonprofit sector, it's constantly evolving.
Right, it's dynamic.
And accounting practices need to keep up.
It's about recognizing that nonprofits create value in so many different ways.
Ways that go beyond just financial metrics.
Their impact is often hard to measure.
But that doesn't make it any less real.
So as we wrap up
Yes?
our deep dive into the Canadian Accounting Handbook,
It's been quite a journey.
remember the guidelines and principles,
They provide a framework.
but it's the people behind the numbers,
The passionate staff.
the dedicated volunteers.
The generous donors.
They're the ones who make it all happen,
They're the heart and soul of the nonprofit world.
driving real change in our communities.
So, next time you encounter a nonprofit,
Whether you're a donor or volunteer,
or just someone who's curious,
remember that the financial statements are just one piece of the puzzle. Take the time to learn about their mission,
their programs.
the people who make their work possible,
It's about seeing beyond the numbers.
and appreciating the human element that makes the nonprofit sector so vital.
That's a perfect way to put it.
Thanks for joining us on this deep dive.
It's been a pleasure exploring this with you.
We hope you've gained some valuable insights.
That will help you navigate this fascinating world.
And until next time, deep divers.
Keep learning and keep asking those great questions.